welcome back to another episode of the Real Estate Investing Club. Again, we are on the road. This is the second podcast, so I appreciate everybody's patience with me down here in sunny California. And we roll with the punches here in real estate. So we're continuing the podcast going forward. Today we have a very special guest in Victor Bell. He is a multifamily master. He's coming at us from California as well. So we're in the same state. I know California is pretty large, so you guys saying that we're near, we're not. But Victor, thank you very much for hopping on the show.
Hey, thanks so much for having me. I appreciate that.
Absolutely. I told you before we got on here, we like to start with stories. We like to hear how people got to where they are. So I'm sure you got a good one. Why don't you take us back to the beginning? How'd you get started in real estate?
Wow. Yeah, that's a great question. So, when I got started in real estate specifically, well, a little bit before that. So I left home when I was pretty young. Parents split up when I was young, and then, kind of dual households, kind of bouncing back and forth. And then I joined the military after I got out of high school, and I'm shortening a lot of this, but got out of the military and then, went to college on the free money for like one semester. And they were like, hey, if you come back, you're going to owe us money. And I was like, oh, wow, I didn't know I had to actually pay attention there. So, honestly, money kind of ran out because it was free. And then I got in trouble and I was on probation and I had to get a job. And while I was at that job, I was working at a place called Hatco Circuits in Austin. Everyone hated their job. So either people had been there for 10 years and they hated it, or people were like me, brand new, and they hated it, but I had to be there. So, driving back to work, because I worked nights, I ended up falling to sleep, going to Austin. Ran off the side of the road, and I was like, okay, something's got to change. Yeah. So the next day when I went to work, I ended up going to a bookstore, and I saw a book on the shelf, and it was like Fast Cash with Real Estate by Ron LeGrand. And I was like, oh, okay, I'm gonna have to do that. It makes sense to me. And I read that book, and long story short, that first year I did $1.2 million in deals.
Damn.
I didn't know what I was doing. This was in like the late 90s, maybe mid 90s, 96, 97. So that's my start. That's how I got started. So literally people just kind of helped me, because I was literally like, took a page out of the book, the script, cold calling, for sale by owners on the phone. I didn't understand market cycles at the time. I didn't know what was happening. But out of all those deals that I did, there was like one house in there and the rest of them were multifamily. They were like duplexes, triplexes, an 8-plex, a 16 unit, things like that in there. So I kind of cut my teeth not knowing what I was doing, not understanding leases or incomes or nothing. So, fast forward, years later, I had moved to Hawaii because I was stationed in Hawaii in the military. And it was kind of one of those deals like, I think everyone says it. If I knew then what I know now, I would do it different. So when I got back to Hawaii later, I was like, oh, wow, I'm going to do real estate here. So I did a lot of real estate in Hawaii. My strategy for doing real estate, because I do residential and multifamily, but multifamily is for my real estate fund. I do pretty houses. I'm not the guy that likes to do construction work, hence why, I'm a negotiator and I kind of negotiate the deals.
I feel like a lot of us investors kind of learn the hard way that we're not supposed to be swinging a hammer.
Yeah. After a bunch of roaches kind of, you open a drawer and roaches jump out and you're like, oh my God, you're like, all right, this isn't, what we wanted. So, doing all those deals in Hawaii, the deals that work the best for me were always multifamily deals. Hawaii is a really, really tough market. Like, it's kind of like a other side of the world, New York. Like if you can make it there, you can make it anywhere story. And but I did really well there. A little bit was the market, a little bit was just my drive. Like I'm pretty driven, and again, this is a full-time thing for us, probably like for a lot of investors when they get started. It becomes their occupation. They put everything into that. So 4 years ago, though, we sold our last apartment buildings. We had a partnership ended. We had been in those deals, like a portfolio of multifamily deals, and we made a lot of money. And then all of a sudden, it was like radio silence. So I was like, wow, what do I do now? And I started looking for bigger deals. And they just weren't, they weren't in Hawaii. That market's a little different. A lot of the deals have been, traded, condo converted, things like that. And told my wife, we had a situation that happened with it. I was negotiating on a deal and I got off the phone. I was like, hey, you know what? We're moving. And we're like, hey, we're going to go to California because I saw the opportunity there. When I hit California, I was like, California's market for multifamily is 10 years behind where Hawaii is.
Right.
Yeah. and all the metrics are the same, demographics, boundaries are the same. Even the taxes are ridiculous. Everyone talks about the taxes, and I'm like, this is a light Tuesday in Hawaii. This is the same
You
thing.
you haven't been to Hawaii, buddy.
so and I'm like, wow, this is great. So that's why we came here, so we can get into bigger opportunities, bigger transactions. So yeah, so that's kind of the short story of how I started into why I'm doing what I'm doing now. So, and
Perfect,
it's
man.
been really exciting. A lot of lessons and a lot of great opportunities.
Yeah, man. It's I love your story because it's you have so many. Well, first of all, the way it starts, so many investors when we get started, we start because our backs are up against the wall. It sounds like you were in that same situation in a job you didn't like. You had that kind of come to Jesus moment in the accident. What what brought you? I know we're going back into the story a little bit here, but what brought you to real estate originally? Did you say you were reading books about real estate investing, that kind of stuff?
Yeah, well, when I was working at that job, when I kind of ran off the road there and then I went back, I was like, I got to do something else. So there was a guy there that did like, disk duplication, like back in the day where you had to have like a burner, and stuff like that. So he was like, yeah. And I was like, why don't you let me kind of take that over? Like, let me see what I can do. And he hadn't did anything with it. And I ended up landing a couple of jobs. So we did the jobs while we were at that job, and we made some money, or I made some money for him. And he was like, okay, yeah, that was cool. But he didn't want to keep on going.
Mm.
Um, so that was kind of big for me because I was like, okay, I got to do something else. So it was just this drive. And finally, it was like going to the bookstore. I was like, there's something in here I can read. Like, I may not, I'm one of those, I'm a guy that if I take on a little bit of information, I like things really simple, I'll just take it and run with it.
Mm.
So that was kind of it. So within there, and I think this is important to share with people. And like in the beginning when I read that book, I negotiated in the newspaper somebody to sell me a property, which was the one house out of that portfolio of deals that we did. Same seller. And the guy said yes, and I was terrified. I was like, oh my gosh, like I don't have the money, I don't know what to do, because this wasn't the time when people were assigning contracts. This was somebody tie up a property and have to go find the money and fix it.
Right.
So I cold call all of the people. In the book also said call like mortgage companies and stuff and ask them, do they have like REO departments and stuff like that. So I cold call. This was back when the phone book was thick, and it was in Austin, Texas. I called all the mortgage companies in the phone book, and I got all the way from the A's to the S's before somebody actually was like, you don't know what you're doing, do you? Come to my office. And he became a
What gave it away, man?
yeah, he was like, how'd you even get this number? And I was like, the phone book. So he actually called me into his office. He was a speaker, and they sold notes and stuff like that back in the day. They had a mortgage company, and they were kind of a traveling education company with Ron LeGrand, just so happened. So he kind of taught me the ropes of like, hey, here's what you're doing right, and here's what needs to be adjusted. And he was like, oh, by the way, maybe I can find a partner for you to fund these deals that you did. So that was kind of my segue into it. So to your point, I thought it was important. That's also important to share. It wasn't just a book. It was also like I set on this other path. Like, what can I do? And then I had some success, but I found a partner, and he didn't want to keep going, but I did.
Yeah.
And real estate's kind of one of those deals where there's always someone out there that's willing to, find a deal, and the other partner is usually willing to put up the capital or raise money. And I didn't really know what I was doing at the time, that was how it works, and
Yep.
that's on the big level to the small level.
Yeah, and I think another really important lesson in that story is that you didn't have the answers. And everybody, especially when you're just getting started, I feel like that's something you really need to keep in mind is that no matter what you're doing, when you just when you do it the first time, you're not going to know how to do it. You may know just like you said, you may know the outline of it. The next step is to do a syndication, but you don't know how to do that. It doesn't matter. You just need to take the next step in the line of the tasks that need to be done. And, the path will kind of create itself in front of you. And I like that about your story is that you took action, you went forward, you didn't know exactly how to do it, but you got it done just by taking action itself.
Yeah, absolutely. Absolutely.
So
To that point, and I found this to be true too. So like really some higher level players that I actually know that, have thousands of units, some of my friends, they didn't know what they were doing either. And sometimes when you ask, like now, it's like, how do I do this? They're like, oh man, I don't know. Like they're honest, like they don't know. But a lot of people think that somebody truly does have the answer. And a lot of it is putting one step in front of the other. And you keep walking, and as you bump into something like, hey, you need this, we're
Yep.
asked, like, what do you guys need from me so I can go get it? And just
Yep.
being honest with people. If you don't have
Yep.
it, just like, I'll go get it though. And
And
I
that's
think
what
that's probably important.
Yeah, and that's why it's so important to have your mentorship group, have the people that you can reach out to, because you're not going to know the answers, but someone will. If you run into a roadblock at any point along a specific deal, along your career, you can reach out to whoever's in your group, and somebody's going to give you some good feedback that will illuminate that next step in the journey. So love to hear that from you. And it's awesome. You did 1.2 million deals in the first year. You said you weren't wholesaling. Was that flipping? What were you doing there?
I held them.
Oh,
Yeah.
wow.
So
Okay.
we held them, and then, raised the rents, and eventually they sold off, but I kept
Yeah.
doing that.
Nice.
So yeah, yeah. And the bigger picture was the house that I got inside of there was the first thing to go because it was vacant.
Right.
And all multifamily stuff. I was like, oh wow, these things, they kept paying every month. So yeah, so it wasn't flipping. Later it was, it started getting introduced as more knowledge, more information over time as real estate kind of took off, at least for me, was like, hey, you can assign a contract.
Yeah.
We called them assigning contracts at the time, not flipping. I
Right.
did a few of those, but I didn't know it then. But now looking back, the market tanked.
Mm.
So some of the stuff that we were doing, it was like I kind of stuck to subject to deals. And these are residential when I did residential. Subject to deals with selling them on a lease option, which is still rentals, and then eventually they got cashed out or I resold them. So, but the multifamily stuff, we just held on to them. They're always like, I hate selling any multifamily property. Like that's me and my wife talk about all the time. Like we'll never sell again.
Yeah.
So yeah, big
Yeah,
difference.
and that's actually I want to kind of hone in a little bit on that because I've struggled with that same question with my own portfolio. I do self storage, and so the smaller self storage facilities, I'm always on the fence. They're doing well, they're making money, especially when they're really small ones. When you go under 10,000 square feet, they'll make $2,000 to $3,000 a month, but you have to. I always ask myself, like, is that worth it? And should I just sell it? And so it sounds like in your mind, you like to hold it no matter the size. If it makes money, then you like to keep it in your portfolio.
Yeah, yeah. So like what I like to do ultimately is find a deal and then look around and be like, hey, could I buy this deal next to it? Could I buy this deal? Could I control
Mm,
rent on the street?
yeah.
Uh, but to your point, like when we sold our last couple of apartment buildings and stuff like that, they were smaller. And we had a good concentration in that area. We were kind of controlling the rents and we knew all the other owners around. But moving here, I was like, we cannot go to that size again. That's kind of one of my new rules of growth. Naturally, you don't start a fund to turn around and buy, a 20 unit, 30 unit apartment building. So, now in this type of market, knowing what I've seen 10 years ago, we're like, hey, look, it doesn't make sense to go to smaller deals. They have to be at least double the size of anything that we've ever owned. And the quality of the asset that we have needs to change right now. So, which is, hence the fund. And, and again, just like the book, I didn't start off in finance. You guys heard me say they were like, don't come back to college. So it came from like I needed to learn how to also, I've been raising money forever, but it's like, how do you put this together? And then what kind of assets are gonna, be the right assets for what we're doing. So to your point, when you have small deals and you have a good education behind, the operations and what it takes to kind of manage, sometimes it's good to bundle those up, sell them and roll that money into a bigger asset and then let that become the new portfolio and cycle out every 10 years or so. Just like every big player does, they don't hold those deals forever. It's like 10-year cycle, pay their investors back if they hadn't already, and then roll into the next bigger asset class, which is why smaller investors that get started, if they stay there too long, they get wiped out. They have
Yep.
800, really small properties, the Section 8 properties, things like that. They hold them and then they try to pass them to their kids, and their kids are like, we watched you argue with tenants. We don't want
I
that.
want no part of that, Dad. Thank you very much.
Yeah. So to your
Right.
point, yeah, that's my thought. Like taking a look at your portfolio, just like any other person, and going, okay, what no longer fits for who I am today.
Mm-hmm.
Right? If I got hit in the head today and forgot everything I knew and I had to leave this to my wife, would she want a $2,000 check, or is it more beneficial to cash out of this, take a couple of $100,000 off of the table and roll up into something that, that'll get us into something bigger?
Yep. And I'm always a proponent of going bigger. That was actually one of the biggest mistakes I made when I first started my portfolio. Was I thought that there was safety in smaller sizes. It's actually the opposite. Bigger deals are safer because you can make a mistake, and that gross revenue will be the pad that you land on. With small deals, if your gross revenue is it's much less than if you have one broken sink, one toilet. It's going to cut into that, the profits of that deal. So bigger deals are safer, regardless of what you may think. If you wanna get started, go big. Just like we're saying here. So there's two routes that I kind of want to take. You mentioned that you're starting a fund. I would love to ask about that. Before we do that, though, you are in a new market. You're out there in Southern California, so that means that you've looked at your market, you've looked at the economy in general, and you feel like you're in a good place to position yourself. Let's just talk about where you think that the real estate market is going. It's 2023, January 2023. There's been a lot of talk about a major recession, things getting even worse than they are right now. What do you see for the next year, next 2 years, when it comes to market prices for real estate?
That's a great question. There really is. Because there's two schools of thought, right? Depending on what people are investing in. So, we look at multifamily assets like 80 to 120 units and now looking a little bit larger. So that's a 30 to $50 million assets, that price points. But that's all based on the income of the asset. So, the market that I'm in, like San Diego, California, some of these really tighter markets, I don't see the values going down based on the incomes per se, but I do see the owners of those assets that have had them for a while, especially like flippers, syndicators, fund managers who took on assets and said, hey, we're going to cash out in 3 years, 5 years, we're going to pay off our investors, whatever it is that they're going to do. I think in 2023, the maturity on a lot of those loans, which is what we're after, on some of these bigger guys and these syndicators that kind of got in to do a value add play and then exit out, whether they're refinancing or recapitalizing through sale, that is going to be the new influx of deals. So I think that's going to be more of a dictator. Naturally as rates, as the rates have risen up, cap rates are going to go up a little bit, but depending on the market you're in, like here, rates are the commercial rates right now are what, 6 and 7, somewhere in there for the bigger deals. But the cap rates people are still trying to get that 4 cap. People are offering 5. But here's what people
ridiculous in my mind. It's like it doesn't make any sense.
Well, what people are going to miss out on, and this is what I learned about Hawaii, deals that didn't make sense. Had I just bought them, I would have been crushing it right now. That's why I got here, and I was like, people are going to miss the opportunity because they're watching the wrong thing. Yeah, I'm not saying that you want to buy something at cap rates, like ridiculously lower than your stuff. I mean, that's a negative yield. But what I'm talking about is like, which is what I tell people, like, look at the location. Try to grab the best location you can, because some of these better quality assets, bigger, in amounts of number of units at a better location, they're not going to trade at a 7 or 8 or 9. Like they're just not.
Ever, yeah.
Yeah, they can. I looked at it, like, if you look at anybody's documents, once and I had to learn this, right? Because I'm really an operator, kind of pretending to be a finance guy. But when I was like, hey, when I structured our fund, because our fund's already launched as a $50 million fund, I was like, hey, these are the returns we got to promise our investors. So when I looked at other people's fund documents, and I was like, oh, they got to give them the same thing, 20%, like they're taking a 20% thing. They got to give these guys 6% preferred return. Then you just reverse engineer it and go, okay, well, even on an asset that seems to be overpriced, you can go into any, broker and say, hey, I love this deal, and here's what I'm willing to offer for it, knowing the fact that they've had to either, satisfy investor returns only 6%, even if they don't get to double up, or they're going to forego 20% of the profit because that was theirs, and they just want to give their investors their capital and exit the deal and keep playing that game. So that's going to offer the opportunity on properties that probably most small investors will never get access to, because they'll have to sell. or an institution will have to do, they'll write down the value of their property based on market valuations and stuff like that for the portfolios, get a list and go, you know what, get rid of all this stuff at the bottom of the list. It's got to go.
Yep.
Right.
Yep. That makes sense. So I just took a peek at the clock. We are running it down. Before we move on to the next section, though, I do want to ask about your fund. It sounds like this is the first time you put one together. I've never put a fund together, so you're going to be teaching me in this situation. So tell us, how did the process go? What made you decide to create a fund? And yeah, just give us the overview of how it went.
Yeah. Okay. So first I found a deal. I found a great deal. And, I spent a lot of time, building relationship with brokers, getting them to call you back on some of these bigger deals is like an art and a science in itself. So I went to some of my other investors that I've done a lot of deals with, and I was like, hey, check this deal out, man. It's awesome. It's 128 units, great location. This thing is beautiful, blah, blah, blah. And they were like, oh, we got to get it for cheaper. And I was like, man, I don't,
They always say that.
They're like, and I had negotiated the deal, but I was kind of throwing my letter of intent on the table. And the more they were like, you got to get this and you got to bring this down and we got to get this. And I started making me realize, I was like, these guys just don't have the money. Rather than tell me, hey, Vic, I don't have the capital for that. They just beat the deal up and they made me feel that like I was an idiot. And I was like, I know. So, right. So, after having those conversations a few times and they were asking for a little bit higher returns, lower price points. And I was just like, you know what, there has to be another way around this. It's not the deal. It's not me. It's not none of that stuff. And then I started looking around at what other people were doing and they were either syndicating or they started a fund. This is before I had even considered it. I was just going to put a partnership together. And then, that was it. So I was like, why don't I just syndicate the deal? So I started talking to some other people, but even in syndication is transactional, which that was my commitment when we left Hawaii. I was like, I'm over chasing deals down. I want to sit on the other side of the table. So I talked to a few of my buddies who actually had a fund who I'm sure probably most people find out it's so taboo. It's like, what'd you do? And they're like, oh, I just did this. And you're listening to them. You're like, okay. So really I taught myself, I was like, I would put into Google, whatever company, fund one PDF and then click it. And at some point, because a lot of this stuff is all over online and it's public information, you can read them. So I read enough of them for them to all start to really look the same.
Yeah.
And then I called one of my attorneys that I had worked with in the past when I was going to do a syndication and we didn't do it. And I was like, hey, here's what I want to do. And, they told me, and I was like, what if I just did a fund? And they're like, yeah, you could. And I was like, all right, how much does that cost? That's really the gist of it. And then they were like, oh, if you're going to raise money here, you're going to do this. And then I just stroked the check and did the paperwork. And they were like, everyone else was like, don't, a lot of my buddies were like, don't do it. Don't, just learn first, do this, do a deal. And I was like, I'm already doing deals for myself. I'm just going to use my money, start a fund. And just like I did in the beginning, hurt my way through it because I know the real estate and I can bring on professionals to manage the capital. And, where's the capital allocating? We're not raising money for someone else. We're raising money for us. So the level of trust in where that money is going into our deals is way bigger.
Yep.
So, yeah. So how it started.
I totally connect with kind of how that got started. I had that same thing happen to me. I was, working with individual JV partners to, I'd go to guys with high net worth guys who wanted to partner on deals. And I had a really good one and I knew it was good. And I went to one of my, partners, my capital partners who generally likes these kind of deals. And he said, no, it's not good enough, blah, 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 blah. And I was like, no, I know this is a good deal. I ended up losing out on that deal and they had it under contract days after for more than I had it under contract for. And I was like, man, we just lost out on the deal essentially, but it just made me realize it's because they don't have capital, whatever their reason, but the solution is to do something like a syndication or a fund or anything like that. So
that deal I brought to my buddies, and traded for 19, which is what I thought I was going to trade for 19 million at the time, which now looking back, they're like, dang. And when I talked to the broker, I was like, hey, what do you think that's performing at? Because he controlled the deal on both sides. And I was like, what do you think the NOI is now? And he was like, they've exceeded the NOI for where it needed to be. So based on valuation, at the time, and I called my buddies, I was like, they were like, if they come back to market, they'll come back to market probably somewhere around 27 to 20 million. And that
Damn.
was less than 3 years.
Damn.
And my buddies was like, you were right.
Yeah, I think that's right. Remember that next time. All right. Well, Victor, that does wrap up our time. I'm gonna have to push us into the quick question round. Are you ready?
Yeah, absolutely.
All right, let's do it. It starts with books. I'm a big bookie, so give me two recommendations, one for general life wisdom, one for real estate specific.
Oh wow. General life wisdom. I haven't read a general life wisdom book.
That's fair enough. It can be from any. It doesn't have to be books. If you like podcasts, if you like, Discovery Channel, whatever. Any recommendation for general life wisdom, and then one for real estate.
Yeah, you know what? Honestly, probably the best book I read, to be honest with you, was The Power of Now at the time when I was
Yep.
doing soul
Oh
searching.
yeah, Eckhart Tolle. It's a great book.
I had so much money, I felt empty. But that was a good one for me because it kind of made me look at what I was doing and go, kind of settle in a little bit and
Mhm.
focus, not just on my business, but on myself and my family, my wife and my kids.
Perfect.
So yeah.
I love it. How about for real estate?
Real estate book. Ironically, the book is called Invest. It's an audible book by I think one of the guys from the Carlisle group.
Okay.
It's new actually, and I really like that book. And it's not just real estate. I mean, Sam Zell's on there, and I think um Gray from Blackstone's on there, and they're kind of talking about their journey about being a good investor. But there's Larry Fink and all those big guys. But that's a really good listen if somebody's going to use a book. And just think about it like real estate alone, because we're all raising capital, we're all looking at assets, and what do the bigger people do, and then take a look at our own thing. So that was a great book for me.
Cool. I love it. Invest. All right, that leads us to the next one. This is for your younger self. So let's go back to the Victor who was just getting started in real estate. He was just doing that first deal back in, we didn't even get a year, way back when.
Yeah,
Go back to him, look him in the eye, give him one piece of advice moving forward.
Spend more time raising money than finding deals.
Great advice. Really great advice. Because once you have the money, you can find a deal. Well, I guess they're both hurdles that you have to overcome, but having the money is definitely one of the harder hurdles to overcome. All right, that leads us to the next one. This is Superman's strengths. We are all gifted with strengths that we uniquely give this world. So, what is your Superman strength?
Persistence. That is the one thing that I have on my side. I'm not smart, but I won't stop. So, it's actually hurt me sometimes too.
Yeah, but it's one of the strengths you absolutely need in real estate is to be persistent because things never go the way that you think they're going to go. So you got to have that persistence to just keep going when shit hits the fan.
Absolutely.
All right, and that leads us to the next question. This is mentors. None of us are islands. We all stand on the shoulders of giants. So who is one mentor who has contributed significantly to your career today?
My wife Sharon, she's been a great mentor to me. She tolerates me. I'm not a easy pill to swallow, and sometimes she tells me stuff which what I need to hear. And be honest with you, she's magic. She just literally lays in the bed because she's a realtor, and she's like, you know what? I think I'm gonna get a lead tomorrow, and her phone will ring off the hook, and she'll come dancing out of the room and be like, I got one, and I'm like, man, that never worked for me.
So I think I'm gonna get a deal tomorrow.
Yeah. So, but she's been a great mentor for me because again, she's my best friend and we talk a lot, and she kind of tells me the things that I need to hear in the moment. That's there's tons of them naturally, but she's the one that's closest to me that understands me the most. So.
Yep. Awesome. I love that. And yeah, and significant others, they definitely see you the most often and they often see what you don't see. So their advice is usually, even if it's a tough pill to swallow in that moment, it's the right advice to the moment.
Yeah, absolutely.
All right, that leads us to the next question. This is the United States. It's a big place, a lot of square miles out there to invest in. So give me one metro you're most excited about investing in.
San Diego County.
All right, San Diego.
I literally packed everything and moved here for that purpose. I really believe in it. I think it's going to be over the next 10 years, it's gonna be the new Miami, that whole craze that happened where people were leaving and stuff like that, just from what, I see by being on the ground, not just reading the media. That's going to be huge. So that's a place to continue to watch and invest in for people interested, guaranteed.
Yeah. Yeah. And San Diego is such a beautiful city. It's a great place to be.
Absolutely. I love it.
All right, that moves us to the second to last question. This is about tools. Tools are the backbone of every business. So what is one tool you could not live without?
My phone. I know that sounds crazy, but my cell phone, like the fact that I can pick up my phone, I can talk to anybody pretty much that I want to on the planet, go to LinkedIn, Facebook, get in contact with them, any broker, any owner, and I'm a phone guy. So my phone is the number one tool. It's making contact and having a conversation with another human being. Those are important. So that's the number.
Yep, that makes sense. Actually, I had an older gentleman on the podcast a while ago, and that was just what I was saying. It's just like, how'd you guys do business before there were smartphones? I just don't get it. It's just blows my mind.
Yeah.
All right, that leads us to the very last question. You've given us a lot of good advice, a lot of things for people to think about. I'm sure people want to reach out, get in contact with you. What is the best way for them to do that?
Sure. They can, well, a couple of ways. So they can go to bell-capital.com. That's our website. And on there, it's a schedule a call thing. Or they can get started and kind of go to the investor portal and take a look at the fund and the fund documents and the offering. They can email me directly at victor@bell-capital.com. And be honest with you, like I just said, my phone, I eat my own dog food. Like, people want to give me a call, it's 808-778-1326. And I tend to answer. And if I don't, I tend to call people right back. They're welcome to text me, like, hey, Vic, what do you have? Or what do you need? So yeah. And then I also have a book if they want to go to that. It's bell-capital.com/book. And it's a free download. It's easy. You just put your name and email in there and click a button and the download pops right up. So that's it. But I'm pretty easy. Literally, you can just Google me and my number pops up everywhere. I'm not hiding. Hopefully as my firm continues to grow, I'm always going to be accessible no matter what. So, that's the business I want to run. I like that.
Perfect. Sounds good. 808 number. That's Hawaii right there.
Yeah, absolutely. It's not a spam number. It's real.
Yeah. All right. Bell-capital.com. I will put that URL in the show notes. So if y'all want to reach out to Victor, just go ahead and click a little more in the description. We'll pull down the full description, and in there you can find Victor's URL. Right on, Victor. Well, that wraps it up. Thank you very much for hopping on the show.
Hey, thank you so much for having me, man. This is a great show. What you're doing for people out there is awesome. I wish I had this when I got started. That would have accelerated what I was doing, because I would have had more people that were listening and guys like yourself putting this out for people. Man, it's awesome. So I appreciate you for doing this. I really do.
Yep, absolutely. I appreciate that. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. And if you guys want to support the podcast, all we ask is that you give us a like, share, subscribe, all that jazz on Apple, whatever you're listening to this on. Other than that, hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode.
Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started, or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI Systems and Vendors Guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the Investors Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investors Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesalers Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day, an even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.